Hello, I'm called Jingonelli. I'm going to be taking you through another part of partnership. And before I begin off, I'm going to require you to subscribe and also follow what I'm pointing at. And before you watch this video, make sure you watch the previous video to be able to follow up properly. So example 1, dissolution of partnership. They're saying Tina and Fina have been partners for some years, sharing profits and losses in the ratio of 1:3 respectively. On 31st December 2020, these partners decided to dissolve the partnership. The balance sheet at that date is as follows. So non-current assets, amount in US dollars, then amount in US dollars. So plant and machinery is 150,000, furniture is 100,000, motor vehicle is 200,000, total giving me 450,000. Current assets, I'm having inventory of 60,000, debtors of 25,000, bank of 40,000, giving me a total here of 125,000. So when I add this plus this, I'm going to get total assets of 575,000. Then I go to the capital, or equity and liabilities. So under equity, I'm having capital. So Tina is having 200,000 as the capital. Fina is having 300,000 as capital. Then accounts payable is 75,000. Then total equity and liabilities amount to the 575,000. Assets were realized as follows: plant and machinery 160,000, furniture 125,000, debtors were taken over by Tina 25,000, Fina took over one motor vehicle 75,000, other motor vehicles were sold for 150,000, realization expenses were 15,000, inventory realized was 55,000. So after you knowing that, they're saying required, prepare the relevant ledger accounts to close off the books of the partnership. That is the realization account, assets and liability account, then capital account, then the bank account. So with the solution, I'm going to first of all begin with closing off my assets. That is plant and machinery, furniture, motor vehicle, inventory, debtors, and even bank. So for plant and machinery, I'm having a balance brought down of 150,000, which is this. Whereby if I want to close it off, I'm going to close it off by passing a realization account. So you look at accounting entry 1 from the previous video. So I'm going to pass a realization account of 150 to make it to close it off. And for furniture, it's having a balance brought down of 100,000. Then I pass a realization account of that same amount to balance it off. Then motor vehicle, balance brought down of 200,000, which is this. I pass a realization account to balance it off. Then inventory, my next asset, balance brought down of 60,000. I pass a realization account to balance it off. Then going to the debtors, balance brought down, it was of 25,000, which is this. Then I balance it off by passing a realization account. Then after me doing that, I'll be left with bank. But from what we had discussed in the previous video, we don't close off the bank or the cash account. So next I'll look at my liability, which is accounts payable. I'll just say accounts payable. And for accounts payable, since it's having a balance brought down of 75,000, from for accounting entry 6, we say that they are going to pay off a liability with the cash or bank. So we are going to pass a debit side of bank, which is going to be of 75,000 to make this balance off. So these are going to be the entries for this. So for this, you're going to look at all accounting entries 1. All of these, you're going to look at the accounting entries 1. For this, you're going to look at accounting entry 6. So after doing that, that's when you can now start with your realization account. And the realization account, remember you were crediting the asset account with the you were crediting the asset account with realization. So since you're having a realization account this side, so when you come to the realization account, you're going to pass debit side to complete double entry. So when you pass when you pass a debit on the realization account, you're going to start off with plant and machinery. So plant and machinery was having a realization of this amount, which you drop here. Furniture 100, motor vehicle 200,000, inventory 60,000, then debtors 25,000. So after doing that, you go back to the question, and they're saying asset realized as follows: plant and machinery 160,000. So you go on the realization account following accounting entry number 8, and then you say plant and machinery of 160,000, and then to complete double entry, you take this to the bank account, and they received this. The partnership business received this amount from plant and machinery 160,000. Then furniture, it was 125,000. So 125,000 which you take to the realization account, and partnership bank account received the 125,000 from furniture. And then looking at motor vehicle, they're saying other motor vehicles were sold for 150,000. So you come and say motor vehicle on the credit side of realization account 150,000, which you will take to the bank. So they realized this amount 150,000 from the motor vehicle, and they also realized inventory realized 55,000. They realized inventory 55 on the credit side of the realization account, and the partnership bank account received 55,000 from inventory. So after me doing that, they're saying debtors were taken over by Tina of this amount 25,000, and Fina took over one motor vehicle 75,000. So I'm going to come to my realization account following the accounting entry number 5. So the capital account here, Tina took the debtors of 25,000, and Fina took a motor vehicle of 75,000. So to complete the double entry, I'll go on my partners capital account, and then I say on the debit side, of my partners capital accounts. So for Tina took 25,000, and then Fina took 75,000. So after doing that, I now I'm going to look at my realization expenses. So for realization expenses, I know they deal with the bank, so I must pay off this amount using bank. So I'm going to go on the credit side, so accounts payable, which is 75,000, and then I already did my accounts payable, which are to be paid off by whereby this payable is being paid off using the partnership bank account. So after doing that, looking at the realization expenses, so I'm going to use my partnership bank account to pay off my realization expenses. Then I go to the debit side of the realization account. So from bank, I'm having realization expenses of 15,000. So I already told you these are the accounting entries, so you look at this. So after doing this, meaning that I'll add this side with this side to find out which side is more. So this side proves to be more, and from the previous video, once this side is more, I'm going to be having a balancing figure this side, which is going to be of a profit. So this side was 590,000, and this side was less. So when I add this amount, this whole amount minus this, I'm getting a difference of 40. So this 40 is going to be shared by the the ratios of 1 to 3. So Tina was having 1 out of 4 times the 40, and Fina was having 3 out of 4 times the 40, which gives me 10,000. This gives me 30,000. So when I add all this, gives me a total of 590,000. So after doing that, I'm done with the realization account, and it has balanced off. So to pass the corresponding or to complete the double entry, I'm going to go on the credit side of the capital account, and I put the realization of 10 and 30. But when I'm beginning my partner's capital account, I'm going to begin with the balance brought down from the question here. I was having capital of Tina of 200,000 and Fina 300,000, which is this, and I pass this to complete my double entry rule this side, and I already have this already. I told you where they're coming from. So with this, you can refer more on accounting entry number 10. Then after that, you're going to add this side plus this side. Remember, with this bank account, I already told you how it comes about, because with the bank account, it's having a balance brought down from the question, which is this. And I already told you what we did here, where this 75,000 came from hitting back on accounting entry number 6, and here accounting entry number 9. And with this, we already did it looking at accounting entry number 8. So meaning that when I add this, I will be getting a total of 530,000. And with this, I will still be having pending figures, meaning that here I don't know yet the balancing. I don't know yet the balancing figure. So, I can calculate it, but I won't be knowing the proportion which Tina will be having and Fina. So I must approve that from this partner's account. So once I add this side, Fina now has 330,000, and Tina is having 210,000. So with this side, remember, I'm only having these two figures. So the difference between this amount here minus this, so 220,000 minus 250, 210,000 minus 225,000, I'm going to get a difference of 185,000. And with Fina, 330,000 minus the 75,000, I'm going to get a difference of 255,000. So with this, looking at accounting entry number 13, meaning Tina is having this amount, Fina is having this amount. When I add this plus this, I'm going to get a total which will balance off with this, and even this plus this, I'm going to get a total which is going to balance off with this. So it's from here that I'll prove whether I've done correct things, if at all. If I drop this here and this here, when I add this plus this plus this plus this, it gives me a total which equals this side, meaning I'll be good to go. And from here, I can now tell that my dissolution, what I've been doing previously, is correct from this, because it's these two amounts that I will just insert here. I already told you with the accounting entry 13, it will self-balance. So this is what they mean by self-balance. So thank you so much for watching. Make sure you subscribe and also follow what we had hint on from the previous video.